thank you. And joining our conversation now is Todd Rosenbluth. He is head of research over at Verify. Todd, it's great to see you.
Great to be here, thanks.
Let's start with the flows. Like Eric said, it's been a banner year so far. You think about the totality of the year with less than 6 months to go. Is this going to be another record year for inflows?
It's certainly setting the stage for it. We typically see strength in the third and fourth quarters relative to what we saw in the first half of the year. I think we're going to see a number of funds. Eric showed that Vanguard with its 500 ETF, IVV, its BlackRock's 500 ETF, those both could set the records. So we're seeing strong interest in actively managed ETFs. That's helping to push up. It's about a third of the overall flows. We're really excited at Verify at the adoption of ETFs. Thus far this year, we think we could see a record by the end of the year.
So speaking of record highs, or records in general, stocks are at record highs as the economy slows down and people think that the Federal Reserve is getting ready to step in. This earnings season is really critical to justifying the 2024 rally and keeping it going. From an ETF perspective, will the big bank results that start coming out on Friday kind of set the tone in terms of how investors position themselves for the second half, or does that not matter until big tech reports?
So I think it will matter because we've seen the sector ETF flows be dominated by technology, communication services. Those have been leading overall. So if we see strength for the companies that are in the more cyclical parts of the economy, in financials, in energy, in materials, we see a broader market, that's going to be a good thing. The mega cap growth stocks that have been leading the market higher, many people are concerned about that and they're looking for other alternatives. So I think it's a good sign if we see the fundamental strength within the banks that are kicking off this year. And of course, XLF is one of those great ways to get exposure to it.
Now let's talk about some of the active entrants into the ETF world. I know you track this a lot. How much are they contributing to this overall number? Obviously the S&P ones lead, but if you go down and you scroll down into like the 50 and 100 range of the list, you're going to see some active funds in there. What are they doing now that's working that they didn't do before?
Well, we're seeing actively managed ETFs from firms like Capital Group that's had a lot of success in its couple of years of entry. We've seen T. Rowe Price, which entered a few years ago but is now really starting to hit its stride. We've seen Calamos, which is a newer entrant into the ETF market. They have that 100% downside protection. They have the first of those products. We've seen a firm like Victory Shares. That's also a newer entrant into the market that's focused on free cash flow ETFs with VFlow as its largest of those free cash flow ETFs. So yes, BlackRock, Vanguard, State Street are still leading. This is a concentrated ETF market, but it's always exciting when we see some of these newer entrants have success in the ETF market.
I have a wild card question.
Sure.
This one's about private assets. The private markets are so hot right now, and it makes sense that you would have ETF issuers trying how to figure out how to put those in the ETF box. There's been some talk that maybe BlackRock's looking at it. Apollo has made some noises as well, but how do you actually do that? When you think about ETFs, I think about, public debt, public equities. Is there a world in which private assets could be in ETFs?
Well, what exists today is private equity companies that have exposure to that in the ETF wrapper. Invesco has an ETF that comes to mind. I don't exactly know how the nuts and bolts of behind the scenes will be to get this done, but if it can be done, I have the confidence in the ETF market. We saw CLOs become a market which was less followed until Janus Henderson entered the marketplace with their JAAA ETF. It's now a $10 billion ETF. We've seen Panagram have success, Van Eck have success. I think that the ETF market can provide liquidity to a less liquid part of the market, but you still have to figure out how to price this. And of course, if they're not trading every day, then you could see discounts and premiums to net asset value, which is something for people to be aware of.
Yeah, putting it in an ETF wrapper would democratize access to this asset class overall. Eric, what do you think? Is this something that's possible from where you sit?
I just don't think so. There are some things that just aren't ETF-able, and I think private equity is one of those things. They did try a couple times to do private equity, and they were like, we'll just invest in super micro caps because they have attributes like private equity, but that's not really private equity, right? So ARK did the interval fund. That's the way to do it, but interval funds, no one wants, they're expensive. But this is BlackRock. if anybody could pull this off, it's BlackRock. So maybe they will crack the code.
Yeah, it definitely feels like a watch this space sort of moment. I also wanted to get your thoughts on mixed asset ETFs, because I'm just looking at it on Bloomberg Intelligence right now. Equity ETFs in the US, they have about $7.4 trillion. Fixed income, we're talking about $1.6 trillion. Mixed allocation ETFs, they only have $25 billion. Pedestrian, why don't you see ETF issuers launching more in that sort of mixed asset space?
Well, we saw that in the past, where we saw asset allocation-oriented ETFs, iShares being one of the firms. They closed some of those products. They then brought them back, or a different version of those products out, like life path-oriented with a target date for maturity. Advisors, it just doesn't make as much sense. It makes a lot of sense for a self-directed investor, but for an advisor, you want to build that portfolio yourself. We find that advisors are coming to Verify for the education to build a product and build a fund of funds, whereas the funds that do it themselves, that hold multiple assets together within a portfolio. But that education can happen. That's a retail, younger audience that I think will adopt to those strategies. So we shall see.
Yeah, I mean, look, there's been a lot of attempts at this, and my colleague Joel Weber, who I do the podcast with, has always said, why isn't there an easy ETF where it just invests in everything in one shot? The reason, the advisors like to have the puzzle pieces. They want to be the deciders. They don't want the fund to do it. And since there's no ETFs and 401ks, these are kind of like, in no man's land.
I think they'll come, and we're starting to see some of these ETF strategists bring their models available into the ETF marketplace and have it happen. John Davi of Astoria Advisors, for example, has converted or offered multi-asset within the commodities and alternative space.
Todd, it is always a delight to see you. Thank you for spending some of your Monday with us. Our thanks, of course, to Todd Rosenbluth of Verify.